Hi everybody, this is Lara with your end of the week video analysis for gold for the trading week ending Friday 5th of April. For the very short term, I'm expecting a little counter trend bounce to continue for another maybe 2 or 3 days, most likely to end about 1297 to 1301. If it doesn't end there and it keeps going higher, the next target is 1307 to 1310. The first target is favoured. After this bounce, I am expecting the downward trend for gold should resume with strength. The next wave down should be quite strong. Elliott wave analysis first, as usual, classic analysis last. This is my preferred Elliott wave count for gold. It sees a huge zigzag unfolding lower, subdividing 5, 3, 5. It sees wave B complete here as a regular contracting triangle, and wave C at cycle degree beginning here. Wave C must subdivide as a 5-wave structure, either an impulse, which is much more likely, or an ending diagonal, which is less likely. Impulses are more common and for C waves. I've got 3 targets for cycle wave C, all of them expecting to see Fibonacci ratios to cycle wave A, and this is how I'm going to approach these targets. When price reaches toward the first target, I'll look to see if the structure of cycle wave C could be complete. If it could be, we'll expect a possible end to the downward movement there. But if price gets toward the first target and the structure is incomplete or it just keeps falling through, then attention will turn to the next target, and so on for the third. I will have strong confidence in this wave count at the weekly chart level if we see a new low below by any amount at any time frame below this price point, because that would invalidate my 2 alternate wave counts. Let's have a look now at the start of cycle C at the daily chart level from this high here, this point here. The first movement down here is an impulse. I'm labeling this minor wave 1. This bounce here fits really well at lower time frames as a triple zigzag. That's not a very common structure. It's not extremely rare though, like running flats are very rare. My research, I have uncovered a few triple zigzags. It's one of the rarer Elliott wave structures, but this is how it subdivides at lower time frames, so that's how I'm going to label it. I expect that's the end of minor 2, and now minor 3 is beginning. Gold, typical of commodities, will often exhibit swift, strong fifth waves, and that tendency is especially prevalent for its fifth waves to end its third wave impulses. And so look out for a swift, strong, minute wave 5 to end minor wave 3. And that could force the little fourth wave that comes just before it to be more brief and shallow than it may otherwise be. For now, I'm looking for a little bounce for the second wave correction to continue and last for maybe another 2 or 3 days. It may be relatively shallow. The strong downward pull of a third wave at 2 degrees may now force minute wave 2 to correct only to about the 0.382 Fibonacci ratio of minute wave 1, which is about 1297. If it doesn't end there though, I'll look for it to end at the 0.618 Fibonacci ratio of minute wave 1, and if it were to be deeper than I'm expecting, I would look for final very strong resistance about the upper edge of this base channel. If price does touch up to this trend line, I would expect a reaction downward from there and a third wave at 2 degrees to begin there. Minute wave 2 may not move beyond the start of minute wave 1. Draw this base channel from the start of minor 1 to the end of minor 2. Place a parallel copy on the end of minor 1. Lower degree second wave corrections usually find resistance or support at the edge of those base channels. The target for minor wave 3 remains the same. This should be sitting next to the third wave label, not down here. The target for minor wave 3 is to reach 1.618, the length of minor wave 1. At the hourly chart level, this is now the preferred wave count. I'm seeing minute wave 1 over at Thursday's low, and minute wave 2 possibly beginning here, possibly subdividing as a zigzag, 5, 3, 5. I cannot see a complete corrective structure yet for minute wave 2, and it hasn't lasted long enough yet for an expectation for it to be complete. The first and preferred target at this stage is for it to reach up to the 0.382 Fibonacci ratio of minute wave 1. When it's complete, I'm expecting a strong downward movement to begin toward the middle or end of next week, maybe for a third wave at 2 degrees. Alternatively, if minute wave 1 didn't end there and it's ended off to the left of the chart, minute wave 2 could still be unfolding sideways as a flat correction, subdividing 3, 3, 5, with minuet B a triple zigzag. Minuet C for this idea needs to be a 5-wave structure. The two targets for it to end remain the same, the 0.382 and the 0.618 Fibonacci ratios of minute wave 1. So far, 1, 2, 3 would be incomplete, and then 4 and 5 would be required. And so the difference in the two wave counts at the hourly chart level now in terms of expectations, the targets are slightly different but not much. It's the structure of upward movement which is different. So the structure may tell us which wave count is correct. If the structure is clear, that is. It isn't always clear. At the weekly chart time frame, this is still a valid wave count, and it's important when you think an Elliott wave triangle is unfolding or even has completed to always consider alternates. And so it's important at this stage with my main wave count seeing a triangle for cycle B complete to consider what if that's wrong, what else could be happening. This wave count is the same as the first one in that it sees cycle A over here, but here it's expecting cycle B may not be complete. It could be continuing further as a double zigzag, with the first zigzag and the double complete here labelled primary W, the double joined by an incomplete corrective structure in the opposite direction labelled X. X waves within multiples are almost always zigzags, but they don't have to be. Sometimes they subdivide as other corrective structures. However, the probability of this wave count is reduced by the structure here of primary wave X. X waves are rarely triangles. Turning attention now to the structure of primary wave X as a triangle, there's a zigzag for A, a double zigzag for B. This is not the most common triangle subwave to subdivide as a multiple. Again, this aspect of this wave count further reduces its probability, whereas there are no problems for that preferred Elliott wave count in terms of structure or how the common structure is unfolding. A single zigzag for C and D, and now this wave count needs to see a single zigzag down for E, subdividing 5, 3, 5. I'm just going to quickly go back to the main wave count and try and explain something. Here, at the daily chart level, downward movement is seen as 5, 3, and an incomplete 5 for a third wave. 1, 2, 3 subdivides 5, 3, 5. Exactly the same as A, B, C. And so the subdivisions at lower time frames are seen in exactly the same way. 5, 3, 5. So a daily chart for this wave count would see 5, 3 and an incomplete 5 unfolding lower. It would be labelled minor waves A, B, C. And this wave count also 5, 3, 5 unfolding lower would be labelled A, B, C, rather than for the main wave count 1, 2, 3. Here the labelling would be only very slightly different. It would be labelled 1 degree higher, and it would be ABC instead of 1, 2, 3. And so that one daily chart, the targets would be the same, the expectations and direction would be the same, but it's the strength or lack of it which would be different. I'm going to go back to the second chart here. My main wave count expects that a third wave down is now beginning. This wave count expects a C wave down is now beginning. This wave count expects, though, that it's intermediate wave E, the final wave of a triangle, When Elliott wave triangles come to an end, they almost always do so with quite a lot of weakness. They end with declining ATR, they often end with weak volume. My main wave count expects that a cycle degree C wave is beginning lower and should begin to develop some strength. This wave count expects that an intermediate degree E wave is moving lower and should continue to exhibit weakness. So classic technical analysis in coming weeks may begin to suggest which wave count is more likely. For this wave count, intermediate wave E of the triangle may not move beyond the end of C. A new low by any amount at any time frame would immediately fully invalidate this wave count and offer quite a lot of support to the main wave count. This is a very bullish alternate which does not have a good probability at all. This is developed because it's possible that gold has been in a basing action for over 3 years and is slowly beginning, after some basing action, a new bull market. If gold is in a new bull market, then how would the Elliott wave count fit? Does it make sense? The answer is no, it doesn't. But you can make it fit. But then there's all sorts of Elliott wave counts that you can make fit if you ignore the right look and if you ignore the common behaviour of specific markets. For this wave count, if gold is in a new bull market, then the first big movement up needs to be seen as a 5-wave structure, and here's the biggest problem for this wave count. To see this as a 5 ending here, you have to see the 4th wave in here and the 2nd wave down in here. There's huge gross disproportion between this 4th wave expanded flat and the 2nd wave quick zigzag. It's okay for gold to exhibit disproportionate 2nd and 4th waves, but only if it's the other way round, because gold, typical of commodities, will exhibit quick, shallow 4th waves and deeper and more time-consuming 2nd waves. And it does that because, typical of commodities, it will exhibit those swift, strong 5th waves within its 3rd wave impulses, and sometimes also 5th waves to end movements. But the tendency is especially prevalent within gold's 3rd wave impulses. There's a swift, strong 5th wave in here to end -3, which forces -4 coming immediately after to be relatively brief and shallow, and disproportionate to -2, giving at a higher time frame the whole movement a 3-wave look to it. But what almost never happens is when it's the other way round, and the 4th wave is more time consuming and the 2nd wave is much quicker. This 4th wave also has covered a much greater distance in terms of price compared to the 2nd wave. This wave count looks really forced. It just doesn't look right. If cycle 1 is over there, then cycle 2 may be complete as a double combination. A zigzag, the first structure in the double, labelled primary W, the double joined by a quick 3 in the opposite direction, labelled X, subdividing as a zigzag, and the second structure subdividing 3, 3, 5, a flat correction labelled primary Y. If cycle 2 is over there, then cycle 3 should have begun, but this upward movement lacks any strength whatsoever. In fact, it's exhibiting increasing weakness. This does not look like the start of a 3rd wave, not even the 1st wave within a 3rd wave. 3rd waves should be unmistakable. They should have support from volume, and it should come with increasing ATR, and the opposite is true. For this wave count, a 2nd wave correction is now expected to end about the 0.618 Fibonacci ratio of the 1st wave. The 2nd wave may not move beyond the start of the 1st wave. A new low by any amount at any time frame, even a fraction on a tick chart, is enough to fully invalidate this wave count, and that's why a new low below this point would add so much confidence to that main wave count. Okay, let's take a look at some classic analysis for the week for gold. There was previously really strong resistance and support, about 1310 to 1300. That's been broken enough times now to have no longer any reasonable technical significance. Last week, volume was pushing price lower. This week, price has mostly fallen of its own weight. There's a little bit of weakness here, with price closing at the weekly chart level as a doji, suggesting a little pause within this downward movement. A doji on its own, though, is not a reversal signal, whereas here, at this previous high, there are two candlestick reversal signals, a shooting star candlestick and a very strong bearish engulfing pattern, which had some support from volume. So overall, there's still quite a lot of bearishness exhibited here. It looks like there's a little pause around resistance and support. ADX was telling us the previous downward trend reached very extreme. It's now declining, telling us that that previous downward trend may now be over. It didn't manage to catch up with this upward movement because of all the consolidations and pullbacks within it. On balance volume this week, though, is giving a bearish signal. It's not a strong signal because this trend line has too steep a slope for this to be a strong signal, but it is a bearish signal as on balance volume breaks below support, and I've drawn this support line as conservatively as I possibly can. There's still definitely a breach here. ATR continues to decline. If there has been a major trend change here and there's a new downward wave which is expected to exhibit strength, it's far too early to judge whether or not that strength is beginning. It's only been going for a very few weeks. At least 3 of them have been counter-trend movements as well. RSI is neutral, plenty of room for price to rise or fall, as is stochastics. What about the daily chart level? There was a series of higher highs and higher lows from that previous low for gold until this last swing low was broken with a new low on this downward day here. At that stage, the series of higher highs and higher lows was no longer intact. It was possible at that stage that there had been a trend change. There are bearish reversal signals at the weekly and daily chart levels. Here's an evening star candlestick pattern. And now this looks like a flag pattern which was broken and breached. There was a downward breakout on this day with support from volume. The target using the flagpole from the deducted that length from the breakout point is 1238 for the next downward movement to reach. There's a little bit of a pause here, but that doesn't necessarily mean that that target isn't going to be reached. Price is finding support around 1285, next support below about 1275. ADX at the daily chart time frame now tells us there is again a downward trend in place, and this is the strongest signal ADX can give when it rises up from low levels and comes up from below both directional lines. It tells us that the trend is in its earliest stages. While price is essentially moving sideways for the last few sessions, ATR is now declining. This looks like a possible pause within the possible downward trend on the way toward that target from the flag pattern. I've adjusted the support line for on-balance volume. This trend line is now virtually horizontal. It has multiple tests. It has very strong technical significance. A break below this support line by on-balance volume would be a strong bearish signal. RSI is neutral, room for price to rise or fall. We've been over ADX and ATR. Stochastics returning to neutral now, and MACD full ball bearish. Overall, that classic analysis does support the Elliott wave count. That's all from me with your gold analysis this week, and I hope all our members are having an awesome weekend.